In early trade on Tuesday, bulls broke above 0.9977, thus creating a strong buy signal. As for fundamental factors, yesterday's macroeconomic calendar was not of great interest to market participants. Eurozone retail sales rose as expected month-on-month in September, but fell less than expected on an annual basis. In general, the situation remains challenging, thus it is too early to talk about an economic recovery in the region. Yesterday, the focus of traders was on the US midterm elections. Obviously, a rally in risky assets, a weaker dollar, as well as a decline in US Treasury yields were caused by expectations that Republicans would win control of Congress. Thus, if Democrats still capture a majority, demand for the US dollar will rebound. In case the Republican Party takes the lead, the greenback will extend losses. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. Well, it is bereft of any important releases except for speeches by Fed, Bank of England and ECB members, as well as US crude oil inventories. Traders are expected to continue focusing on the US midterm elections. However, it is not yet known when the results will be announced. Most likely votes will be counted by the end of the week. Until then, the market situation is expected to remain tense. Moreover, the US is set to release data on inflation tomorrow. Against this background, bulls may well try to break above 1.0094. The 1-hour trading chart shows that the euro-dollar pair has hit the October highs and is poised to break through them. However, this scenario is unlikely without the announced results of Tuesday's elections and given tomorrow's inflation data. Meanwhile, the price has consolidated above parity. Now bulls need to zero in on protecting this level. I believe that the best way to make a profit is to go long at 1.0035 in the event of a bearish correction. A false breakout at this mark will create a strong buy signal. In this case, you can count on a return to at least 1.0094 and therefore a profit of 50-60 pips. If trading activity at 1.0035 is subdued, I recommend that you put off going long until the price reaches 0.9977. At this level, long positions can be considered amid a false breakout. Going long on a rebound will be relevant only at 0.9928, with a view to catching an intraday upward correction of 35-40 pips. Alternatively, if the price forms a false breakout at 1.0094 or 1.0136, a sell signal will be generated. Short positions on a rebound can be opened only at 1.0182. In case the price goes down to 1.0035, breaks through it and fixes below this mark, the volume of short positions will increase. Thus, the euro will slide to 0.9977 and 0.9928. Speaking of the British pound, the situation is quite similar. The level of 1.1511 acts as support. A false breakout at this mark followed by a bounce off moving averages will create a buy signal. In this case, the pound sterling may gain to 1.1591. A rise above this mark will make it possible to add long positions, thus pushing the British pound up to 1.1666 and 1.1722. At the level of 1.1722, traders may go short on a rebound. Short positions amid a false breakout can be considered at 1.1591. The most likely scenario suggests that the price will fix below 1.1511 and tests it from the bottom up. This will lead to a deeper correction to 1.1430 and 1.1358. Its further movement will depend on tomorrow's statistics on inflation in the United States. The British currency is currently in demand thanks to a weaker dollar amid midterm elections. Nevertheless, its medium-term outlook is gloomy. After all, Britain's economic bounce back is unlikely. And the Bank of England has recently announced that it will slow the pace of interest rate hikes. Good luck.